Hello guys, Steven Ducks here. Welcome to this video. So today we're gonna go over a bunch of the hot plays that happened last week. As you can see that in the last 2 months, there is at least 5 plays at least in 1 month, and they're providing decent amount of liquidity, and the flow is relatively low, but there's profitable opportunities everywhere. And let's go over some of those tickers. And before I start this video, make sure to click the like button and subscribe. Let's get into it. So the first one we have is SERA. This is a biotech. As you guys know that biotechs are typically very difficult to short, and with how much it has gapped up around 300%, the overall pushing percentage is about 100% on biotech. And as I said, that for pretty much all of the biotechs, the pushing percentages are not very stable. They're not following the average statistics compared to other sectors that you're going to trade. So healthcare stocks, they are very special. And I would completely recommend avoid biotech tickers in the future. It doesn't really matter. It's about gap up short or multi-day runners. The only one that you potentially can short is a fresh chart with maybe a week or 3 months of IPOs. First time will be rounding up and hitting a dollar block. Maybe that would be a decent short. But other than that, pretty much all of the biotechs that has history trading in the last couple of years, and with all of the first screen day, sometimes they do work, sometimes they do not. The consistencies are not there. So if you make money today, you might lose it tomorrow on the biotech. And that's not for the long-term strategies. So I would completely avoid those tickers. Then we had SBFD. This one is a micro float underneath 1 million float. The gap up percentages is about 100%. Initially it's at 2, opened at 4, high of the pre-market is at 5. So I expect about 120%, opened a little bit less than 100%. You can see the pushing percentages is almost another 50%. So more than 50%, almost gained about 3.5, so almost a 100%. And for these type of tickers, average pushing percentages, they do not work on them. And if the ticker is really crowded, you always want to wait for consolidations before you short into any type of spike. And for these tickers, the reason why they're so difficult for beginners is they always perform something like this. They do a fake out, typically it blows through your risk, and for lower floats, it's very easy to get shaked out because first of all, their candles are very aggressive, and each candles can sometimes perform 20% in one candle, and it gets halted, and it's very difficult to get out if you do not respect your risk. So that's the reason why a lot of people tends to get shaked out in the breakouts over here. And once the ticker consolidated for about an hour, it faded all the way down. Typically, ticker fades about 50% from the day high because it's a low flow. Once it hits the neutralized area, which typically is around $2. But for a macro float and very crowded high density volume, the majority of the time only fade 50%. So your typical risk reward risk will be shorting the consolidation, risking the day high, and the reward will be around for the low 4-ish. So that's for SBFD. Do not recommend it as a beginner shorting into this type of under 2 million floats. Very difficult to control your risk. So I would prefer much smaller size. Now let's go over MLGO. Now this is the tricky one, and a lot of people got squeezed on the first screen day. And let's take a look at the overall chart and give a decent analysis on this one. So the first one we had is a massive spike into 9 in that intraday. There's no consolidations around into that spike, so you can't really know where is the major resistance. Then we had a slow grind up to the 4.7 and 5.3. So pretty much all the way to 5.3, the resistance is pretty much canceled. So using the 5.3 as a risk is not very ideal. And a lot of people are using the pre-market high and the $5.3 area, which is right here, to short into these consolidations. And as I said, resistance is pretty much canceled, so they're not reliable, and they get squeezed all the way up to 15-ish area. So once I would give this ticker maybe a 1 try out if you really want to test that 5.3 resistance. But once the 5.6 is broken, that's where you have to exit your positions and leave it for the rest of the day, because you can see the ticker went all the way up to 15, and if you keep fighting with the tickers, and you will end up very similar squeezes like TOP. And you can see that in the next day, it's not normal at all, because first of all, ticker like this typically fades into the major support, which is around $6 area, but this one broken into support, faded all the way to $1. So if you're allowed to this one, it's a horrible experience, and because you're gonna lose 90% of your position. To prevent yourself getting trapped into these tickers, there's a couple of reference tickers you can look at. One is LUNR, another one will be TOP, did a very similar action as well, and there's also GDC, I believe. All three of those tickers performed a very similar action. So what will happen going forward on MLGO, this will probably spike again into the $5 to $6 area, consolidate, then fade again. So if you didn't catch MLGO on the short side or the long side, there will be a push soon, because typically back orders losing 90%. What's the difference exiting at $1 compared to exiting at $0? So typically they're more stubborn holding their positions, and stock will likely to bounce back and they will sell. And that will be a very decent shorting opportunities in the upcoming weeks. And there's going to be a lot more plays that's coming in the end of this year. So make sure, be careful, and do not trade biotechs, do not trade low flows, do not trade crowded volume. Make sure to spot the correct resistance. And that'll be end of this recap videos. If you have any questions, please leave a comment below. And other than that, I will see you guys in the next one.